What's going on, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap. It's January 31st, 2022. Today was month end, and what a month end it was. Some crazy action today. We're going to keep it brief today. Let's talk about these indices. Before we do that, quick disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. Last but certainly not least, do not YOLO your entire account to any one of my trades or anyone's trades for that matter. All right, these indices, check it out. The rally that we have been playing for finally came. And over the past week or so, everyone has been super bearish and like, the market has to crash because rates are going up and all this stuff. And it really all came down to just market positioning. And everyone was positioned bearish. We had month end. We had some nice month end buying that occurred, and it resulted in a very nice short squeeze. So we had the S&P 500 finish up 1.8%. NASDAQ QQQ was up over 3. Small caps over 3. Dow Jones was the big laggard, up 1.14%. And this ARK Innovation ETF was up 9.46%. Crazy return. Volatility was down across all of these indices, and the breadth finished out nice and positive. Now our Finviz heat map, check this out. Massive moves. So we had Netflix up 11.13%, Tesla up 10.68%. Really, all of these FANG stocks, very nice moves. And you might be asking, like, why are these moves so big? And really the reason why is because all of these names have had significant down moves. So when you get into a volatile environment and the VIX is very high, the VIX is almost like an energy meter for the market. The higher the VIX is, the bigger moves that you're going to get. And coming into today's session, the VIX was at about 28. So it's kind of like a rubber band or like a slinky, however you want to think about it. Once it gets really wound up, then once that energy releases, you get a very big move. And we were seeing from our analysis, these dark pool buyers were munching on the market all last week throughout the weakness. And sure enough, the move finally manifests. So very nice move for all of these mega cap stocks. Sectors. Take a look at this. Chinese equities have moved into our number 2 momentum slot. This KWEB ETF was up 9.74%. ARK Innovation ETF, massive move. ARK W, blockchain assets, really big moves across the board. And you might be saying like, oh, this is great. These moves are so big. They're a function of the volatility in the market. And again, a function of those losses that have already been incurred. So this is really like a nice snapback rally. Style factors, the growth style factor was up 2.93%. High beta was up 2.99%. And what was interesting is that a lot of these areas that have been functioning as safe havens for market participants, such as the high div, low vol stocks, they actually were underperforming versus these areas of the market that no one has wanted to be in. All right, let's take a look here. We will check out the actual index action. And also, before we do that, the seasonality. The seasonality is pretty strong heading into February, but then once you hit that middle of February, the seasonality really turns again. So we have a brief window of time where we have a very nice seasonal edge here. All right, let's take a look at these markets. S&P 500, look at this great candle we put in today. And down here is like nobody thought the market could go up. All is lost because of the Fed. The market has to crash right now. And sure enough, we ended up moving to the upside. And this bottoming pattern actually looks very similar to prior bottoms. Now, my trend model is at a +1. It never flipped to a +3 today. So I wanted to make sure that into this strength, we had a very nice 2-day move. And our analysis was telling us we might get a very sharp multiple percentage move very quickly. And that's exactly what we got. So one thing I always strive to make sure to do, especially when I'm in an environment where it's not a +3 market, if we get a very powerful move, I should be taking some risk off into that move. And these overnight futures, they've opened for trading tonight. The market is down 0.26% in the after hours trading, but we had this really nice move throughout the day, being down 0.26%, no big deal. And we had a ton of equity buying that occurred on the close due to a market on close. It was like 6.3 billion of buying. So I actually took the opportunity to short into the close. But overall market still looking okay. Now we're above this 200-day moving average, And look at this, our new value area for February is lit up. This brand new value area, moving out of this one, huge value area, and we have our monthly point of control right above us at 45.34.75. That's also going to coincide pretty much with this 20-day simple moving average. I would not be surprised if we actually got to that level over the coming days. All right, let's take a look here at our NASDAQ. NASDAQ is also down slightly in the after hours market. The NASDAQ doesn't look quite as good as the S&P 500, but hey, we're close to this 200-day moving average. We're also close to this 20-day. And remember, even if you're in a bear market, you know, it's similar to when you're in a bull market, you get periodic pullbacks to that 20-day moving average. When you're in a bear market, you should get periodic bounces up to that 20-day moving average. That's why it didn't really make sense to be like ultra bearish, you know, we're super extended away from the 20-day, because that's where you could get a violent bounce that hits you right in the mouth. All right, Russell 2000, also down a little bit in the after hours market. Russell is actually above this new monthly point of control for February. And what else do we have here? The dogs of the Dow. Not really too exciting here. We're above the 200-day moving average as well, and we're also inside of this monthly value area. All right, let's talk about some of my trading for today. Let's dive in here. So today was, you know, a great trading day for me. I came in position properly. So yeah, for the month of January, I actually closed out pretty much flat. So full transparency, the beginning of January was very rough for me. I definitely made a few tactical errors, some mistakes. And, you know, my trend model flipped negative. And for whatever reason, I was just trying to buy dips and just trying to be a little bit too cute in the beginning of the month. But I made up for it at the end of the month. The S&P 500 finished out this month. I believe it's going to be down about 5%. If I'm not mistaken, it's like 4 or 5% here. Yeah, down 5.27% year to date. And I am right now up probably like 0.1%. I am going to be recording my results for the 2022 US Investing Championship, so you'll be able to see that. But yeah, I'm pretty happy, to be honest, that I got, you know, essentially a flat month. It's always good when the market draws down, you can maintain a flat portfolio. That is really good progress. So definitely very proud of how I was able to pull it together here. So for my trades for today, I was long Apple heading into this session. And you can see this is a 3-star trade for me, which is the biggest size that I do. And I was able to take a target here for $8.90. Took another target at $9.10. And then I took a third target at $8.80. So I just put here, you know, I'm out of Apple. My trend model is at a +1, but after 2 days of rallying, it's a much more fair fight between these bears and the bulls. So as part of being a trader, especially in 2022, one of my goals is to only be operating when I feel like there's a huge edge in my favor. And that was one thing that, you know, I kind of stumbled on in January. If I had not been like buying stupid dips in January and I just waited until we finally saw our edge materialize at the end of the month, you know, I could have had a fantastic month. So that's just something I'm taking into the following month. Hey, maybe Apple keeps running here, but after it puts in some candles like this, you know, the risk reward of being in the options might not be that great anymore. So I might actually put on some common stock tomorrow, or if it dips, maybe I'll reestablish a position. But yeah, it's all about what happens after you put your trade on and before you close out your trade. You know, whatever happens afterward, you know, it's all good. It's all about just capturing a good risk reward. All right, so I did those in the option space, and then what else did we do here? So let's check this out. A couple of others as well. I day traded IWM calls today. I got into these at 9.53. Closed these out for a nice winner. I was out of these in like 8 minutes. So I closed them out for $6. I paid $5.47. I closed out a third of my Zim calls. Again, these were max size at a 3-star position. For $4.60, I paid $3.55. Took another target at $4.20. And exited this position completely, just because, again, the options, you know, I want to be heaviest in options when I feel like the edge is, you know, really in my favor. I had sold these SoFi puts for 81 cents. I believe I did that on Friday. And I was able to buy them back for 29 cents. So if you can do that in just one day and you collect, like a 60-70% winner on your position, it doesn't really make sense to leave it on for another 3 weeks just to try to get that remaining like 30% of the profit. And then the final thing that I did today was I actually entered some SPY puts. So I've been bullish, and pretty much everyone has been like super scared and bearish on this market. Was able to capture a nice sequence here, but I noticed what I think is another opportunity heading into tomorrow. And the opportunity is that there was some very nice momentum in the market today. And yeah, it was a fantastic trading day. But I really think things got exacerbated to the upside by that market on close order. So we had, shorts covering the MOC. I think that really kind of pushed things up to 4,500. And I thought that was a little bit of like an overextension. So I entered those puts on the close. I actually posted that on Twitter. And there's, a bunch of people like doing like the @remind me because they think it's like a huge deal to be like short the market. For me, I'll probably piece out of this thing like, by like 9:45 tomorrow. It's really just in case we get any sort of like back and filling. It's really just like a quick scalp trade, to be honest. All right, and so far, yeah, it looks like maybe we get some back and filling tomorrow. One thing that I'm looking for, what would really scare everyone, and this doesn't have to happen. We might actually just go straight up to this 20-day simple moving average. But what I could see happening is tomorrow, ends up being, the beginning of the day red. And then all of a sudden we find ourselves, retesting this 5-day EMA, and everyone once again loses their minds. And at that point, I'd probably close out my puts and get long. So yeah, that's all I'm really looking for on that trade. But that about does it for this market recap video. I'm actually, tonight, this is the last day of the month, and I'm going to be going through all my trades through my trading journal, Trader Sync. And I'm just going to be documenting everything and seeing like where, I could have done better, where I made some mistakes, and really just, try to get better for next month. Because that's really what this is all about. We have a really good process going here. And yeah, I think if we follow it correctly, we're going to have a great year. It's all about just reviewing and seeing where you can get better. So with that being said, that about does it for this market recap video. Hope you all have a great rest of your evening. I'll see you all tomorrow.